Hello and welcome to Pro Trader Strategies Market Commentary for Monday, April the 23rd. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please take a moment to read over this disclaimer as it talks about what I teach in these daily market commentaries, or what I talk about in these daily market commentaries should be considered general commentary and does not constitute investment advice. I don't know what's in your I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. So please remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having all that out of the way, let's get it on with some economic data. Across the pond, we're starting to see some of the flash estimates. Now, remember, we look at ISM, which is the Institute for Supply Management. Over across the pond, they look at the flash PMI, flash CPI, those kind of things. The reason why is they don't have the Institute for Supply Management. Since we do, we still get those flash estimates, but they aren't the most up-to-date economic data points. Our Institute of Supply Management comes out first and is the one that is more widely looked at. All right. But over in Europe, they still have the flash manufacturing PMI coming out of France at 53.4, right in line with expectations. French flash services PMI, Purchasing Managers Index, is 57.4, expected to be 56.5. Remember, anything above 50 is expansion in the economy. It doesn't necessarily mean it has to come in higher than the estimate. It just means anything above 50 is expansion. And then we start looking at the German flash manufacturing PMI, came in at 58.1, expected to be 57.6. And then the German flash services PMI came in at 54.1, in line with expectations there. And then for the rest of the European region, we got the flash manufacturing PMI coming in at 56, slightly lower than the expected 56.8. And services PMI for the European region, other than France and Germany, came in at 55, expected to be 54.8, so slightly higher than expected there, but in line for the most part. Here in the United States, we did get our flash estimates for manufacturing, came in at 56.5, expected to be 55.2, and our flash services PMI came in at 54.4, expected to be 54.3, so slightly higher than expected there. And then our existing home sales came in at 5.6 million units, expected to be 5.55 million units, so higher than expected there. Now, we've been looking at these economic data points and seeing a lot of these numbers come in a little bit lower than expected, showing a bit of a slowdown. These numbers are not showing that. These numbers are showing that the European region is doing actually rather well based on these data points, and the United States with the existing home sales is doing pretty good too. So a lot of that little bit of a lull that we were getting, a bit of a scare, maybe a dip, is kind of subsided now, at least for the short term. It doesn't look as bad, or doesn't look like it is going to continue to slow like we were seeing for a short period of time there. All right, on to the overall markets. Let's look at crude oil coming off just slightly by about $4. The national average for gasoline is up around $3 a gallon for the most part, but that due in part to the rising price of oil prices. Doesn't mean they aren't really looking at the fact that there is a glut of gasoline in inventory, and that really, kind of messes with the economic picture, right? High supply means there's a lack of demand, and supply being higher means prices need to come down until those two can meet. Well, we aren't seeing that. We're just seeing prices rise and that demand not really meeting it, but it's due in part to crude oil moving higher and trying to look at that $70 a barrel mark. All right, gold futures just falling out of bed. I guess Putin's done buying. Market's moving higher. Not a whole lot of inflation out there to really worry about. There is still unrest in the Middle East, which has been driving gold, but not really seeing a whole lot of new information coming out about more civil unrest, if you will. But one thing to note here, Friday we got below the 9-day moving average and finished on the lows. Today we barely made an attempt to move higher and blew through the 50-day moving average, the value area high, and came down to test the 78 Fibonacci retracement area, which has acted as support and or resistance for quite some time, all the way back to January. That has been a major line in the sand for the bulls and bears to battle over. Right now, the bulls are holding that line tight, but the bears are trying to push through as we speak. All right, on to Bitcoin futures, still below that level I was talking about. I thought that these things were going to roll over, but it's really trying to push higher. Needs to get above this 9250 area, 9350 area. Settle above 9350 would be a major coup for the bulls in the cryptocurrency. So I'm still kind of looking at it to kind of roll over here and go down and test that 5880 area. I think it really needs to be tested before we start moving higher. I don't necessarily mean that it's long-term bearish there. I just think that technically speaking, we've got to go down there and test it, and probably sooner is better than later for the bulls if you are bullish in cryptocurrency. All right, bonds came down and are testing the lows that we've seen in the past 52 weeks and probably past several years, to be quite honest. But coming down after the big sell-off, we've had this consolidation here and then sold off to the lows. This is what I would like to see happen in Bitcoin, is come down, test those lows before resuming a rally. I don't necessarily think that's going to happen with bonds. I think we're going to kind of trend sideways here. It could put another hike on the books with the economic data points that we've been getting. It's not heating up, but it's moving along, and these guys are trying to be ahead of the curve by quite a bit. Let's look at VIX. The VIX is in the 15 handle again, unfortunately so. That used to seem to be a high, but that hopefully is the low for 2018. But we have come off as the overall equities are starting to try and move higher. We've got the Dow Jones Industrial Average moving into positive territory by about 25 points. Pretty quiet day, not a whole lot of volume. Maybe people are waiting for all of these earnings that are going to be coming out pretty shortly. And again, pretty quiet day in the NASDAQ. Inside day, up 35 points after yesterday's or Friday's big sell-off. And again, E-mini S&Ps up 7 points, but an inside day. This is what we're talking about with an inside day. This is a 30-minute candle of the E-mini S&Ps. Each one of these blue section represents the overnight session with the day session. And you can see the value area high and the value area low are well within yesterday's range. Some people look at it like the entire wicks. I'm looking at it from the market profile aspect, and that is an atypical inside day for the E-mini S&Ps. Having said that, I don't have a whole lot of I don't have anything in my IRA. I'll let all of those long puts and stuff like that I kind of tied to my short strategies that were way out of the money. No sense in covering those. A lot of those went off with the April contract. So basically nothing in my IRA. My margin account, basically nothing as well, other than the really long duration puts in Tesla. And that is because we are in the middle of, or at the very beginning, I should say, of earnings season. So we're getting into that. A lot of earnings coming out, especially tomorrow morning, that I'm going to be talking about. Google is one that comes out today in the afternoon. Since I mentioned it, let's just look at it real quick. Let's look at Google. Comes in after the close today, playing Google to the upside with the last one that I had, Caterpillar. Caterpillar, I'm going to be probably playing to the upside. Could be a game time decision. I'm going to be poking around at a couple other things, but looking like I want to play Caterpillar to the upside and just get below this 145 handle somewhere in Caterpillar to play to the upside. Google playing to the upside as well, like I mentioned. We also have Verizon coming out. We have Coca-Cola. We have Citi. We have 3M. So there's a lot of stocks coming out today. But the ones that I'm going to be looking at are Google, Caterpillar, Coke, Verizon, and finally going to be, there's the Google that we're going to be looking at. And so I'm going to be looking at Caterpillar, Coca-Cola, maybe Freeport, McMoran, Verizon, and Google for sure. So a lot of those going to tie up most of my margin. So glad that I have everything off the books, clean slate, ready for earnings and all my margin to throw at this. All right. So stay tuned today. I'm going to be tweeting out what I am going to be doing in these earnings, or what I have done for these earnings trades, whether I've gone long deltas or short deltas. Being long deltas, that would be being short puts, or being short deltas, that would be being short calls. So that's what I'm going to be looking at for the earnings. Maybe even an iron condor or a strangle, something like that. Those are my favorite ones for earnings that I'll be looking at for these trades. All right. So keep your eye out for that on Twitter, and I'll talk about those tomorrow in the daily market commentary. That's about it for today. Give me a thumbs up or a thumbs down, like or dislikes on this video. Let me know what you feel. Give me some comments. If you give me a thumbs down, definitely give me a comment to know what it is about this video you didn't necessarily like. Maybe I can make some changes for that. You know, if it's my ugly mug being in the on this, I don't know if I can change that. But otherwise, give me a thumbs up or a thumbs down and leave me a comment, all right? Other than that, if you can't take that and miss on a Monday, then take it.